Amrita Sen is here. She's Director of Research at Energy Aspects. Amrita, welcome. Reprice in which direction?
Thank you. Well, I think the prices are headed in the right direction. Demand concerns have been paramount in kind of getting prices down. And look, we share those demand concerns. China has been weak, although today's measures will go a long way in at least getting the economy off its worst, right? And we have been saying that the worst is now behind us. But I think what we've been trying to highlight to everyone is that demand's only one side of the equation. Supplies continue to disappoint. Libyan supplies, half of it is offline. U.S. production isn't growing very much at all, and inventories are very low. So it is hard to justify prices where they are right now just based on those demand concerns.
So you think prices should be higher, in other words? And, we look at the good news that might be for some energy investors, but also think, well, if gasoline prices start to edge higher into the holidays, that could put some pressure on the consumer whose confidence this morning was already, falling. Do you think that's likely to be the case?
I don't think gasoline prices are high enough, and even if, say, oil prices or Brent prices go back up to $80, is going to be high enough to dent consumer confidence. I think consumers have, to an extent, have been struggling for other reasons in the U.S. And again, the U.S. Fed cuts are a sign that the labor market has been starting to struggle. We're nowhere close to $4 gasoline. Even $4 gasoline, to be honest, adjusted for all the inflation that we've seen, is actually not high, but definitely not current prices. I do think that's much more a media rhetoric around high gasoline prices, especially with the upcoming elections, rather than the reality of that's what making consumer sentiment weak.
Where do you think the oil price is headed?
Look, I don't think prices are going to be materially higher in the near term because you have so much uncertainty, right? You've got the U.S. elections coming up, and I don't think necessarily that people want to position before that. You've also got a big OPEC meeting coming up on 1st of December. But if inventories continue to stay low, and I think one of the interesting things that's going on in the market right now is the time structure, which is the shape of the curve, is quite steeply backwardated. Back in the day when you had such strong backwardation, the flat price should have been about $85. Even in the past, by the way, a similar stimulus that China has done today, even half of the size in the past would have caused a $6 rally in Brent prices over time, not immediately. So all the signs, be it inventory, be it the stimulus that China has done, should lead to higher prices. Now, having said that, the Chinese economy is in a much worse space today than in the past. So I'm not expecting it to be a one-for-one reaction, but I'm just giving you context of how, at least in the past, markets have reacted, and does show you how bearish sentiment is right now.
And you think it's all sentiment that is keeping oil prices from rising? In other words, if people suddenly kind of saw it the way you see it, that we could get a meaningful move higher?
I do think so, in the sense that because positioning is very one-sided, everybody's short, and our quant team do a lot of analysis on the positioning of the market, and you can see that in their data. And I think that, to be honest, is my biggest fear of volatility, that you have a couple of events and suddenly prices go up a lot, which, again, nobody wants that volatility either, right? Look, again, like I said, demand is a concern, but we do think with the Fed cuts and with these China moves, demand should be gradually improving. Again, we are only calling for 1 million barrels per day of year-on-year demand growth next year. This year is 0.8. So these are very low numbers, but supplies are still disappointing, and that's the point, that that's enough demand growth to keep the market tight.